Welcome back to AI Crypto Pulse, your ultimate source for real-time market intelligence, institutional-grade technical analysis, and the most comprehensive digital asset news available on the internet today. We have a highly critical market update for you this morning as we dive deep into the crypto price prediction for today, May 18th, covering the specific setups for XRP, Zcash, and Ethereum. If you are looking at your portfolio right now, you are likely seeing a sea of red, as crypto prices are noticeably down across the board today. Traders and massive institutional algorithms clearly did not like the latest narrative and news flow coming out of the United States, triggering a rapid wave of risk-off behavior. This sudden shift in sentiment has caused the total value of all cryptocurrencies globally to drop by over 1.3% in a remarkably short amount of time, landing the aggregate market capitalization dangerously near the $2.57 trillion mark. This massive contraction is catching a lot of retail investors completely off guard, especially considering the seemingly positive fundamental catalysts that were supposed to be driving the momentum. To truly understand the magnitude of this market-wide pullback, we have to look closely at the psychology of the current trading environment and how the United States market open completely dictated the momentum for the rest of the world. Over the past few weeks, traders had been heavily positioning themselves for a massive breakout, pricing in a flawless macroeconomic environment and uninterrupted institutional adoption. However, when the reality of the global financial landscape hit the charts today, that over-leveraged optimism was quickly weaponized against the bulls. The 1.3% drop in the total global market capitalization might not sound like a catastrophic collapse on the surface, but when you represent that percentage in actual fiat terms, we are talking about tens of billions of dollars being wiped off the global order books in mere hours. This aggressive capital flight shows just how fragile the current market structure truly is, with fast money rapidly fleeing the digital asset space the moment there is even a slight hint of regulatory or economic turbulence brewing in the traditional financial sectors. What makes today's aggressive downward price action so incredibly frustrating and frankly quite confusing for the average retail investor is that it happens simultaneously with what should have been a massive, celebratory legislative victory for the entire industry. Just yesterday, on May 17th, a highly influential Senate group officially moved the much-anticipated Clarity Act forward, clearing a major hurdle in the United States legislative process. For years, the single biggest dark cloud hanging over the digital asset space has been the suffocating lack of clear, actionable rules from federal regulators, which has kept trillions of dollars of conservative institutional capital sitting safely on the sidelines. The advancement of the Clarity Act was designed to specifically fix this exact problem, moving the entire cryptocurrency industry significantly closer to a formalized, transparent, and legally binding regulatory framework within the borders of the United States. Fundamentally speaking, this is one of the most bullish structural developments we have seen all year, setting the stage for massive long-term growth and mainstream corporate integration. Yet, despite this undeniably massive leap forward for the legal standing of digital assets, the professional trading desks and high-frequency algorithms treated this monumental news as a classic, textbook, sell the news event. If you have been tracking the real-time data flow across major platforms, it was quickly pointed out by top-tier analysts that the Bitcoin price still dumped by almost 2% immediately after the Clarity Act advanced. This counterintuitive market reaction clearly shows that a massive chunk of smart money and short-term speculators utilized this widely broadcasted positive event as a prime liquidity window to actively reduce their overall risk exposure. After weeks of incredibly strong, heavily leveraged market positioning, in anticipation of this exact regulatory milestone, these traders simply locked in their profits and stepped away from the table. They realized that the actual implementation of the law is still months away, and they were not willing to hold their heavy bags through upcoming macro uncertainties, choosing cash over long-term conviction. This calculated wave of institutional de-risking at the very top of the market hierarchy instantly sent a violent shockwave down through the rest of the altcoin ecosystem, causing significant collateral damage across the major large-cap networks. When the king of crypto sneezes, the rest of the market catches a severe cold. And today was certainly no exception to that golden rule of digital asset trading. During this brutal session, we saw the Ethereum price take an exceptionally hard hit, dropping by more than 3% as cascading liquidations flushed out late long positions across the decentralized finance landscape. Ethereum's sharp decline is particularly concerning because it acts as the primary foundational layer for the vast majority of Web3 applications, smart contracts, and stablecoin liquidity pools. When ETH bleeds this heavily, it forces a massive contraction in on-chain activity and sends a clear signal that market participants are rotating out of high-beta tech plays and seeking the absolute safety of fiat currency until the dust settles. Of course, we cannot discuss a major market pullback without zooming in on Ripple's native token, which has once again found itself trapped in a highly frustrating downward spiral. The XRP price fell by nearly 2% during today's trading session, fully erasing the hard-fought gains from earlier in the week and testing the patience of its incredibly loyal community. Right now, Ripple's XRP price is holding a very weak and precarious technical structure near the $1.39 level. For an asset that has so much underlying fundamental utility, including its massive cross-border payment partnerships and growing institutional adoption metrics, seeing it struggle to maintain basic support levels during a regulatory victory is a tough pill to swallow. The XRP army has been waiting for a decisive breakout for months, but today's price action is a stark reminder that even the strongest assets cannot single-handedly fight off a macro-level liquidity drain orchestrated by massive institutional trading desks pulling their bids from public exchanges. When we take a much closer, objective look at the daily XRP chart, the technical price action paints a very cautious picture, clearly showing that sellers are currently controlling the short-term momentum. This dominant selling pressure comes directly on the heels of yet another painful rejection from the higher overhead resistance zones, where a massive wall of supply has repeatedly swatted down any bullish breakout attempts. Currently, the XRP price trades uncomfortably near that $1.39 mark, and more importantly, it remains entirely suppressed below several recent critical swing highs. In technical analysis, making lower highs is the absolute hallmark definition of a short-term downtrend, signaling that buyers are losing their conviction and are completely unwilling to bid the price up to previous premium levels. Until the bulls can muster enough sheer financial volume to smash through those descending swing highs, the overall market structure will remain mathematically tilted in favor of the bears, keeping the asset in a defensive posture. Diving deeper into the specific momentum indicators for XRP, the data continues to lean heavily bearish in the immediate short term, offering very little comfort for those holding leveraged long positions. Let us specifically examine the Relative Strength Index, widely known as the RSI, which is a premier tool for measuring the velocity and magnitude of recent price changes. Right now, the RSI on the daily time frame stands at a highly concerning 37.3, which is a definitive mathematical confirmation that weak buying strength remains the dominant theme in this current market environment. An RSI reading in the mid-30s means the asset is bleeding momentum rapidly, but it has not quite reached the extreme panic levels that usually trigger a massive V-shaped institutional buyback. It sits in that dangerous middle ground where retail traders are slowly giving up hope, and the smart money algorithms are simply stepping out of the way, allowing gravity to slowly pull the price down. Furthermore, if we cross-reference that RSI data with the stochastic oscillator, the technical reality of the situation becomes even more apparent for traders navigating these choppy waters. Currently, the stochastic oscillator is flashing a reading of 29.74, effectively keeping XRP pinned extremely close to deep oversold territory after enduring several consecutive days of relentless downside pressure. While some novice traders might view an oversold reading as an immediate, guaranteed signal to blind buy the asset, veteran market participants know that an asset can easily remain oversold for extended periods during a confirmed downtrend. This specific reading suggests that, while the sellers might be getting slightly exhausted after days of dumping their bags, the buyers are still absolutely terrified to catch the proverbial falling knife. The market is experiencing a standoff right now. The bears are running out of heavy ammunition, but the bulls are completely refusing to step onto the battlefield until they see a clear shift. With all of that structural weakness defined, we must completely map out the exact XRP price prediction for today's session, starting with the immediate bullish case scenario. If the broader cryptocurrency market can suddenly find its footing, and XRP manages to aggressively reclaim the critical $1.45 region with a massive surge in verifiable trading volume, the narrative could flip instantly. Reclaiming that specific level would invalidate the immediate short-term downtrend and signal that the institutional buyers have finally decided to step back in to defend their long-term positions. If this aggressive bullish reclamation occurs, buyers could confidently attempt another powerful, sustained move directly toward the heavy $1.50 psychological resistance zone. Hitting that $1.50 mark would completely trap the late-arriving bears, forcing a cascade of short liquidations that could easily provide the necessary rocket fuel to push the price even higher, totally rewriting the gloomy technical narrative. However, markets do not always move in explosive, highly dramatic straight lines. In fact, they often spend the vast majority of their time in frustrating, sideways chop, which brings us to the neutral path for today's price prediction. If the immediate foundational support sitting near the $1.38 level continues holding firm against the incoming wave of algorithmic sell orders, we could see a complete stalemate. Under this specific scenario, the XRP price may remain entirely trapped in a tight, highly boring consolidation range between $1.38 and $1.45, straight through the remainder of today's US and Asian trading sessions. This neutral path is often the most psychologically draining environment for retail traders, as it tempts them to overtrade in a completely directionless market, slowly bleeding their capital through exchange fees. If you see XRP just chopping sideways in this zone, the absolute best trade is often no trade at all, simply waiting for a clean break. Conversely, we must be intellectually honest and prepare for the absolute worst-case scenario, which brings us to the highly dangerous bearish outlook for XRP over the next 24 hours. A clean, high-volume breakdown completely below that critical $1.38 support floor would instantly signal that the last line of defense has totally collapsed. Losing that floor could rapidly expose Ripple's native XRP price to a much deeper, significantly more painful downside cascade, driving the asset directly toward the $1.32 liquidity area. There is very little historical trading history between 138 and 132, meaning the price could easily slice through that zone like a hot knife through butter if panic truly sets in. Traders holding leveraged positions must be incredibly disciplined with their risk management today, because if the global market capitalization continues to shrink, XRP will not be magically immune to the gravitational pull of a broader, systemic digital asset sell-off. Now, shifting our focus away from the heavy, bleeding large-cap assets, we absolutely must highlight the single most impressive anomaly in the entire crypto ecosystem today. While Bitcoin, Ethereum, and XRP were busy painting the charts bright red, Zcash spectacularly bucked the macro trend and completely outperformed the broader market, posting phenomenal gains well above the 5% mark. This is a massive, attention-grabbing move for the legacy privacy coin, proving that highly specific sector narratives can still completely decouple from general market fear. When traders saw the regulatory advancement of the Clarity Act, a significant portion of sophisticated capital clearly recognized the growing, undeniable future demand for sovereign privacy and completely untraceable, shielded transactions. In a world where every single move on public blockchains is becoming increasingly monitored, tracked, and regulated by federal authorities, the foundational value proposition of a privacy-centric asset like Zcash is suddenly looking incredibly attractive to massive whales who value their anonymity. When we pulled up and had a detailed look at the daily Zcash chart, the broader technical structure stands in absolute stark contrast to the weakness we just analyzed with XRP. The charts clearly show that the bulls are maintaining absolute, undeniable control over the asset's trajectory, perfectly continuing the massive momentum from the strong, high-volume rally we witnessed earlier this month. The ZC price currently trades with incredible confidence near $543.30, successfully and steadily recovering from last week's brief, fear-induced dip down toward the critical $500 psychological region. The fact that Zcash buyers aggressively stepped in at that $500 level and completely absorbed all of the selling pressure proves that there is immense institutional demand underpinning this specific asset. Every single minor dip is being treated as a golden accumulation opportunity, creating a beautiful staircase pattern of higher highs and higher lows that technical analysts absolutely dream of trading. Validating this incredible strength, the momentum indicators for Zcash are flashing arguably the most perfect bullish signals on the board right now. The relative strength index currently stands at a highly healthy 56.09, which beautifully keeps the overall momentum slightly bullish without dangerously entering into an overheated, overbought territory that would risk an immediate correction. Furthermore, the daily stochastic oscillator reads a powerful 79.35, definitively showing that buyers absolutely still control the short-term momentum in the wake of this latest impressive technical rebound. That is all the time we have for today's massive, data-driven market breakdown here at AI Crypto Pulse. We hope this deep dive into XRP, Zcash, and Ethereum gives you the edge you need to navigate today's highly volatile trading session. If you found this institutional-grade analysis valuable, make sure you absolutely smash that like button, subscribe to the channel with the notification bell turned on, and drop a comment below telling us if you are buying the XRP dip or riding the Zcash wave. Stay safe out there, and we will see you in the next video.